everyone, it's Kristen. I wanted to go ahead and make things easier for you. If you're a lot like me, I hate kind of sifting through all of these articles and not having the time in the day to really read it all. So what I did is I kind of read up on how the new tax bill affects our health insurance coverage. And I wanted to just kind of make this short video for you so you don't have to go through and read these articles. I will attach one of the main articles though that I'm using as part of this video, just in case you do want to go through the details. But I've got my handy dandy notes here. This basically is about the Tax Cuts and Jobs Act, or HR 1, that President Trump signed into law on December 22nd, 2017. Number one, how this tax bill affects our healthcare insurance. The repealing of the individual mandate. That's a big thing. It's not actually repealed until 2019. So if you didn't have health insurance any of the years prior and you're expecting to be penalized and having to pay that fee when you file your taxes, you're still going to have to pay that fee when you file your taxes. But starting in 2019, that will be repealed. So you won't have to worry about that. Number two, the employee-sponsored health insurance programs. With this, nothing really changed about the employer-sponsored health insurance programs. The employer mandate is still in effect. That did not get taken away. So employers, if you have 50 or more, or the equivalent of 50 or more full-time employees, you still have to provide them health coverage. Now, one of the big things about this, though, is that the IRS is no longer going to penalize those full-time employees that fail to maintain that health coverage through their employers. So that's what that included here. So again, the IRS is no longer going to penalize those full-time employees who fail to maintain their coverage through their employer. Right? Moving on to 3. HSAs are unchanged. Nothing changed here. There were a lot of different things that lawmakers wanted to do to HSAs, but nothing made it into this bill. So HSAs are completely unchanged. The big thing about that here, and I've got my handy dandy notes, that way I know I'm giving you the right information, is that there is still a 20% penalty if you are under the age of 65 years old or younger and you take money out to use on medical expenses. Unless it's a qualified medical expense within your HSA guidelines, you will get fined that 20% penalty. So definitely know your policy, know your HSA, know what qualifies as a medical expense under your HSA. One of the major things that they were trying to do was including premiums in that, but premiums are not included as a qualified medical expense unless there are some exceptions. The only way a premium is going to be considered as a qualified medical expense under an HSA is if it's a COBRA premium, a premium for Medicare Parts A, B, or D, or any premiums that you paid while receiving unemployment. Now again, regular premiums, no go, not a qualified medical expense. But again, if it's a COBRA, if it's a Medicare Part A, B, or D, or if it's a premium you paid while you were unemployed, then you're good. Now, I want to go ahead and just include this information for you guys just in case you were wondering. The contribution limits for HSAs for the year 2018. If you have single coverage, the contribution limit is $3,450. Again, single coverage, $3,450. That's your limit. And then if you have family coverage, your limit is $6,900. So again, family coverage, $6,900 is your contribution limit. All right, moving on to number 4. All right, deducting medical expenses got easier for years 2017 and 2018. Now, I want to explain this. The medical expenses, it used to be where it was anything exceeding 7.5% of your income was deductible. The ACA, or the Affordable Care Act, or Obamacare, however you know it as, they're all the same thing, the ACA, that actually changed it to 10%. Now, as of right now, with this new act that President Trump passed, it is 7.5% again, but only for years 2017 and 2018. Once 2019 gets here, it reverts back to that 10% that the ACA had changed it to. So at least for 2017 and 2018, you know, a lot of people are going to be looking at that extra money that they can go ahead and deduct and hopefully receive back from taxes. So this was the major news on how this new tax bill affects our health insurance. So I hope this was helpful. Let me know if you like my video. Give me a thumbs up, subscribe to my channel, message me. I might even go ahead and start doing this as a regular thing for you guys if it really does help. But again, I will also go ahead and attach one of the main articles I got this information from, just in case you do want to read more of the details involved. All right, stay well.